Welcome. In this explainer, we're going to dive right into a really critical update in the new Income Tax Act 2025. We'll be breaking down Section 19, a provision that's completely essential for every salaried professional and tax advisor to get a handle on. All right, let's kick things off with a situation that probably sounds familiar to a lot of you. You've paid 2,500 rupees in professional tax. Now, the big question is, under this new 2025 Act, can you actually deduct the whole amount? Let's find out. Okay, so to really get to the bottom of that question, we first need to take a quick step back. Let's make sure we're all on the same page about how taxable salary is calculated, because, this is the foundation for everything else. So the whole process starts with your gross salary. That's the total figure your employer pays you. But, and this is key, you're not taxed on that entire amount. The law actually lets you subtract certain specific deductions. What's left over? Well, that's your net taxable salary, and that's the number your income tax is actually based on. And that brings us to the star of our show today, Section 19 of the Income Tax Act 2025. This is the specific rule, the one provision that lays down the law on what you can, and more importantly, what you can't, deduct from your salary income. Now, take a look at the exact wording here from the Act itself. This isn't just legalese. The language is super important. When it says things like computed after making the deductions and mentioned in the following table, it's being very deliberate. It basically means there's no room for guesswork. If a deduction isn't on that specific list, it's a no-go. It's what we call a closed or exhaustive list. So what's the big idea here? It's all about one word, clarity. Section 19 is designed to just get rid of any and all confusion. For all you professionals out there, this is absolutely vital. If an expense isn't explicitly named in this section, you just can't deduct it from salary income. Simple as that. It creates a very clear, very rigid framework. Okay, so let's dig into the very first deduction that Section 19's table allows. We're focusing on this one because, honestly, it affects the vast majority of salaried employees all across India. So the Act uses this formal term, tax on employment. But what is that really? Well, on your payslip, you know it as professional tax. And that's a really important thing to remember. This isn't a central government tax. It's a state-level thing, and not every state in India even has it. Let's quickly break down what makes this tax so unique. First off, as we said, it's a state government thing, and its power actually comes directly from the Constitution itself. Now, here's a really interesting point for compliance. Even though your employer is usually the one cutting it from your pay, the legal responsibility to pay it is actually yours, the employees. And that's exactly why Section 19 lets you deduct the full amount that was paid. All right, enough with the theory, right? Let's make this real. A quick practical calculation will show you exactly how this deduction works and how it helps reduce your taxable income. So let's imagine a real person. We'll call her Priya. She works in Maharashtra, and this year she paid the state's maximum professional tax, which is 2,500 rupees. Let's see what that does to her taxable salary. Okay, so if you look at the calculation, it's pretty straightforward. Priya's gross salary is 8 lakh rupees. Then we apply that Section 19 deduction for the professional tax she paid. The entire 2,500 rupees gets subtracted, bringing her income chargeable under head salaries down to 7,97,500. See, it's a direct one-for-one reduction. All right, especially for the CAs and tax pros tuning in, this next part is absolutely crucial. Understanding the law is one thing, but applying it correctly, that's the whole game. So let's talk about compliance and some common mistakes to watch out for. So how do you actually claim this? Well, it's usually pretty simple. The number one rule is the tax has to have been paid during the financial year. Most of the time, your employer handles this, and it shows up right on your Form 16. But hey, if for some reason they don't, you can still claim it yourself when you file your return. Just make sure you hang on to your payslips or payment records as proof. Now, here are some of the common traps people fall into. You definitely want to avoid these. First, please, don't mix up professional tax with your standard income tax TDS. They're totally different things. Second, remember what we said about Section 19 being a closed list? Don't try to deduct other taxes here. And finally, a really common one. Always double-check your documents to make sure you claim it if your employer hasn't already. Okay, that was a deep dive. Let's pull back and quickly recap the absolute must-know points from all of this. So, to boil it all down, 1. Section 19 is your go-to guide, your rule book for salary deductions, period. 2, it specifically allows a deduction for tax on employment, which we now know is just the fancy legal term for professional tax. And 3, and this is the answer to our first question, you get to claim the entire amount of professional tax you paid during the year. And that leaves us with a bigger, more strategic question, especially for all the CPAs, tax planners, and business leaders watching. When the law gets this specific, this restrictive, like we see with Section 19, how does that change the game? How does it impact the way we design tax-efficient salary structures and compensation packages down the road? It's definitely something to think about. And that's a wrap on our look at Section 19. We really hope that helped clear things up for you. Thank you so much for watching, and of course, please like, subscribe, and share. And just a quick but important reminder, this video is for educational purposes only. It is not professional advice. Tax laws are always changing, so please always consult with your professional advisor before taking any action.